What's up everybody? Hope you're all doing great. In the next few minutes I'll do a quick analysis on Bitcoin, but with that also kind of the whole market. The whole crypto market is still very much correlated, so doing an analysis on Bitcoin is most of the time a good indicator of how the market is doing. So I think you all know that yesterday we had some bullish momentum, if you could call that. I mean, a month ago you wouldn't have called that bullish, but some bullish momentum all the way up to 43, but then we kind of retested off of that level, I guess you could say, and dropped down a lot from there. We dropped down to 38,620, and that's not really what I expected, to be honest. So that's why I'm doing a new analysis, because I developed some sort of a theory back in December, I think the beginning of December, that the market circumstances that we are experiencing right now are quite alike from the market circumstances we were experiencing at the end of May up until the beginning of August. That's still possible, but what was the main takeaway of that thing was that if we look on the weekly, that we broke the 50 EMA like all the time with the wicks, but we didn't break it with the candle. We only broke it with the candle once, and that was the last time, and after that the more bullish markets started. So if that were true, then you would say that like a week ago the bull markets had already started, or at least we would have gotten back up over the 50 EMA again. So that's not true. That's the first thing. And the second thing is that back then the wicks of the candles and sometimes even the candles always found support at the major key level below the 50 EMA. So if we're looking at the major key level below this EMA, then this is kind of the key level, and I guess you could extend it a little bit, but I don't want to conform my technical analysis to my ideas. I want to conform my ideas to my technical analysis. So I guess you could do something like this, make it a little smaller here as well, and then this is the key level below the 50 EMA. And as we're seeing, if I had drawn it the way I used to do it, then we actually broke that already. So that would kind of destroy the whole theory I set up, which wouldn't be nice, because that would practically mean that we might be a little bit more bearish than I thought. And if we actually do break this key level, so at 38,600, let's just set it there, then we're inevitably going down to 35,000, and from there I don't think that's enough of a support to actually prevent us from going down to 31,000 again. So that's what happens when we really break that. And at this point of time, that hasn't really happened yet, but we really don't have any room to go down anymore. So if we do go down, then I guess my theory is just false. And you know, you shouldn't hold on to your theory too much. You should kind of try to get rid of your ego and just see what the market is doing. So if we are going to break that a key level, that would be a shame, because, you know, more bearish markets, my opinion. I'm not sure if that will be the bear market. I'm not sure if that's even possible with the way Bitcoin is right now anymore. But yeah, as I said, it wouldn't be nice for the short-term investors and stuff. And we'll probably drop down to 35,000 again, and from there I'll probably update this whole analysis and talk about it a little bit more, as long as we do stay above that key level. So let's jump back down to the daily. See, because what did happen is that right here, within this scenario, we touched the 38.2 fib of the bearish fundamental move. From there had our major fall. And here we actually did that as well, like from the first bearish move, we touched the 302 and had a major fall from that. So it's still kind of in line. I mean, this move could still be this move, like something like this. It still looks the same, and I know markets don't repeat themselves, they only may rhyme, but still, so that's possible. We could see something like this, go up to the 236 again, and then drop down again, because we did as well here, and then from there we might start the bull markets. But in my theory, that would only be possible from like the 19th of February, so third week of February. And of course, before that, what happened, because these boxes are completely the same, I just copied them. Before that, it was bullish as well. So I guess we could kind of like, this was like a week and a half before that. So I guess we could say like the beginning of the second week of February, we could already see some bullish moves. So that's still possible. The theory is still possible, but as I said, for that to happen, we cannot break or go down any lower. So if that happens, just throw away the whole idea. If we do stay above that and we see some bullish moves, because we did here as well, we saw a bullish move of 25%. So if that happens from now, that would mean the price going up to 48,000 again. So I don't know, it's possible, but it's going to be difficult. I think it's more likely that we go up to 44,000 or something. So yeah, as I said, that's possible, but keep in mind too that this theory could be completely false if we break right now. Yeah, so that's basically what I think the market is doing right now, or what I think it can do based upon basically two scenarios. So if you do have any questions about this full analysis or the theory, please let me know down in the comments, and I'll make sure to respond to that as soon as possible. But as for now, thank you all for watching and listening, and I hope to see you all in my next videos. Bye.